years. Dean is going to share some market insights, and he's been a licensed real estate agent since 2012 with KW, Keller Williams. His first rental he bought in 2011. He completed his first flip in 2012. His associate broker's license was received in 2020. He's done over 200 transactions, and that includes flips, wholesales, and retail deals. He is a kindred spirit of mine. We are brothers in the fishing world. We were just talking about those important things this evening. And he likes hiking with the family and track suits, as you can tell. So please give Dean a warm welcome.
Can't run in this thing because, anyhow, my brother in Pike, is that how you call it?
Brother in arms of fishermen?
Brother in arms. Brother. You guys love those little, like the memes and everything, like the little videos on Instagram and stuff like that? Everybody has those clips. I just took a social media class, and they were talking about using the trending sounds along with the trending pictures and the memes and the, everything that happens. That's social media. It's not what I'm here to talk about today. I do want to talk about market statistics. The tracksuit thing, I just got to get it out of the way. This was a wholesale fee, combined in a wholesale fee for somebody that brought a deal. We put something together, and I've got a bit of a tradition where, buy me a tracksuit. That's my coaching fee, right? Nice. Anyhow, fishing. We're going to talk a little bit about that here in just a second. But reason why I want to talk about, and I want to bring you through the fact that I flipped my first house in 2012 and bought my first rental. My wife and I bought our first rental in 2011 is simply because we've been through this portion of the bull market, okay? We'll go through the statistics, and I want to gain some feedback from you folks and really just see where you're at, okay? But the goal here is to give you some information, not necessarily tell you what to think, but bring the information to the table so you can go ahead and make your assumptions. Fair enough? Good. All right, there's that pike.
Nice.
Long story. Not going to get into it today, but I enjoy fishing. I really do. And what to expect. We're going to report the facts. We're not necessarily going to get into too much opinion, but we'll make some observations. We'll also get into some charts, graphs. This is information from the last month that actually reported, and that was June. We're in mid-July right now, in case you didn't know. Come on, give me some love. Come on.
Got it.
There you go. Thanks, Johnny. And then we'll have some questions, time for Q&A at the end, if time permits. All right, so first slide up here. We've got 1 year closed sales. This is a simple chart that you can pull from RealComp. Get this guy out of here. I like leaning on stuff. All right, and you'll see right here, right off the bat, how many real estate agents we have. Okay, how many of you folks work with buyers? Okay, generally, are the buyers feeling optimistic right now, or are they getting the crap beat out of them? And are they discouraged? Are they? 50-50? Okay, different price points probably then. How many others? Anybody else feeling discouraged from the buyer situation? Yes? Okay. Well, we're seeing this right now. This right up here, the entire MLS. Just under 10,000 transactions happened in the month of June. You start to compare that to the 3-year chart, which we'll get into in just a moment. You're going to see that everything's down. It's wild. You got Oakland County's down 17%, Wayne County's down almost 11%, and then Detroit specifically down 7%. Here's what's really, really interesting, is the prices are still rising. Okay, you guys get that, right? Oakland County is one of those places it's wild. We'll get into the statistics right there with Oakland County, but you can see it's been on a 6% clip It's actually going back and studying the numbers all the way back to 2012. Oakland County's been on a 4 to 6% clip. It just on a regular basis every month, right? That's how it's clicking along. Which you'll see how the numbers break down here in just a moment. So we got the entire MLS up 5.6%. The average sales price, this is something that I truly enjoy watching so I can gain some knowledge. It helps me make an assumption of what's happening and what the general feeling is in the market, okay? So we'll watch those numbers there. Detroit's been on a tear for the longest time. Like for the past 3 years, it's been wild. So this is the 3-year chart. Prices are up 5.6% year over year. 3-year closed sales. All right, you're up here, right around 14,000. Okay, 13 and change. This is back in 2021. These peaks that you see here, and here. That's usually the month of May or June. All right, just because it's when the buyer pool wakes up, people are starting to do transactions, the houses are ready to sell, all that stuff. And then the numbers over here remain the same. But just so you get an idea of what the 3-year chart looks like. These are the sales prices. Okay, again, the numbers are similar, or they're the same right here, but the median sales price here in Oakland County, $367,000. Okay? This is the run I really want to get into and show you. Okay, you check my time real fast. All right, this is a 20-year chart. This is the maximum amount of information that I could pull from this particular database, which was Realcom. Okay, you go all the way back, 2003, and you can see it's like, what do they call those heart readings at the hospital?
EKG?
EKG, that's right. It kind of looks like it, right? This is the heartbeat of the market. We're going to go ahead and coin that term right now. But you see, right here, these peaks, this is going to be May, June, July, August. So those are the hot months. Going all the way back. Who can guess what this is right here, this big jump?
COVID.
Absolutely right, 2020, okay? You guys know what interest rates were back when COVID happened?
4, 3?
Yeah, I don't know exactly. We're going to get to it though. Take a look at this. This is what's really profound. After that big hike, see this red line here? It's like the market perked up and then it's just going down from there. It's wild. So we'll come back to this slide here in a little bit, but I just wanted to show you what we're experiencing. So that feeling that you have with the market, for those of you that are having a tough time finding good deals, who's having a tough time finding a real good deal? All right, seeing a lot more firehouses and just prices that aren't jiving with where you really need to be. I mean, it's one of those telltale signs that you've got a very competitive market, or people want a little bit more money out of it, or they just can't negotiate on the wholesaler end, or I don't know, there's a lot of things that go into it. Next slide. Price trend. This goes all the way back, again, to 2003. So 2005, 6, 7, that was the big bull run that we were dealing with right before the drop. Subprime, the loans came due, they had a lot of adjustable arms. The one thing I really want to try and pull out of the audience and get a base on, right? Again, I'm not here to make assumptions. Let's put our minds together and figure out exactly what happened back in 2008. I mean, it was, the interest rates dropped out. They adjusted back up to a higher interest rate, and people had an issue with affordability. Is that right? Come on, who remembers 2007, 8, 9?
Right.
Okay.
Great buying opportunities.
Well, that's what we're going to get to, right? Because if you can go ahead and understand what the market's telling you, you'll have a chance to strike when the opportunity is there. All right, here's the next slide. Oh, one more thing I want to point out here. See here, market dropped off. Median sales price right about there, $200,000. It was actually in 2005, it was $207,000. I've got those numbers written down with a couple notes here in just a moment. But it took all the way to 2016 to recover after that market drop, or the Great Recession as we call it. These are the Fed rates, okay, the issued rates. Now the reason why you see it right up here is these are the issued rates from the Federal Reserve. And the website that you can actually find this is Fred. Just type in Fred, market statistics, you're gonna find this. So right here, 2006, 7, and then just the bottom dropped out of the rates. Ran like this, again, 2009 through 2016 is about where the market started to shift again. Then you had some growth, and then dropped because of COVID. You see these here, these blank, or these grayed out areas? That's the recession. These are our recession type of period. So if you study the GDP in a market, 2 quarters of consecutive loss in GDP, that's what determines that gray box. I'm gonna go ahead and wrap this up here. Before we move on from this slide, let's take a look at this little dip right here. Now we're back up. We got 2022, 23, 24. How long were we up here? About 3 years? 3.5 years? Okay. The question becomes, what type of a black swan event do we have to have in order for the market to drop out again?
Recession?
Yeah, but,
Recession.
okay, so recession, affordability, is that an issue? Okay. I mean, everybody's talking about it, gas prices, food prices, stuff like that. But the key point, if you're taking notes, when the country's in recession, the Fed will lower rates. Okay, but it's gotta be on paper. Now, there's a general feeling, at least from my end, in my experience, going back all the way to 2011, something just doesn't feel right. Who agrees? Yes, okay, perfect. Market doesn't feel right. Could we use more inventory?
Yep.
Absolutely we could, okay? Because the prices are still growing, that means that people are still buying, okay? Prices on food, housing, all that sort of thing. Let's get over to this, okay? I'm gonna wrap this up now. 2005 to 7, the interest rates were 6.5%. Okay, you can check them yourself, but trust this number, plus or minus. Average median sales price, it's not too redundant. The median sales price was $207,000 in Oakland County. And we're talking affordability here. That's $1,300 a month. That's what that average house cost in 2005. Present day, okay, 367, 77% more, $2,044 a month on your monthly payment. That's an 87% increase, okay? Yeah, we're getting the affordability squeeze. All right, here's some other asset classes. Maybe you can appreciate this. Because the one key thing to remember is that if you found a way to make money, you could pour it into these asset classes. That's rentals, maybe digital currency if you're into that sort of thing. I just calculated these numbers the other night, but if you look at this, Bitcoin, 43,000 back in February 7th. Today, now 2 days ago, 52% growth. Okay, Caspa is another coin that's out there, 64%. Now, precious metal people, there we go, gold and silver, right there. That's your growth since February.
Ooh, that's huge.
Like that?
That's huge.
That is crazy. Look at it again. Got your pictures? All right, stock up on an asset class that you understand and that's readily available. Okay? There's always opportunities to create wealth. And study the supply and demand. You're not limited to one asset class. Here's places that you can find information that's relevant to this talk. If you want to take out your phones, you can go ahead and do that. Okay? This one right here, BEA, Bureau of Economic, whatever, that's the website. Right. Coin market cap, that's gonna tell you about your digital currencies. Kitco.com, those guys right there, those are precious metals, right? They're gonna tell you palladium, platinum, all that stuff. This right here, Fred, all kinds of graphs. Get deep into that stuff right there, it's great. Adam Data is a, ATTOM data.com. That's a paid website. And then Realcom, if you're a real estate agent, that's where we pulled these charts from. If you want to connect with me on YouTube, I will be supplying this information on a monthly basis. So if you want to go ahead and connect, this is where you can find me. Friend me on Facebook, follow me, whatever. And then over there, that's the YouTube page. I'll put some commentary out there from time to time as well. Good?
Yes.
Fair enough. I'm about out of time for the talk. Jim?
Got 15 minutes.
We got 15 minutes for questions. Who's got something burning deep down inside that John?
Not really a question, a comment.
Sure.
Anybody who follows the markets knows right now, the stock market's trading at higher than it's ever probably been. So there's a lot of people making a lot of money out there. A lot of people think everybody, woe is me, woe is me. Believe me, the millionaires are making millions. Their portfolios have gone up substantially, just like your chart showed on those alternative investments. They're making huge profits. Think about it, 52% up Bitcoin since February 7th to today. 52%, that's not bad. So every dollar you put in, now it's worth $1.52, correct?
That's what that means.
Read the charts, it's right there. There's a lot of different ways, as you said, to make money.
Well, here's another a side note to go ahead and jump on. These markets right here, the cryptocurrencies, it's volatile as all get out.
That's true, yes.
I mean, look, 43,000, 73, 61, 65. Today was like 64. All right, so big swings, big swings. Yours?
Yeah, I was gonna talk about that exactly. Bitcoin crashed probably about a year ago or something, so it looks more like that. Saying I'm gonna go invest in Bitcoin tomorrow because it's up 52% and the runway is unlimited is bananas. Also, while you're holding it, you're not gonna make money. It's only when you buy it that you sell it. So if you want an asset that will give you money, still buy rentals, do your homework like that. Looking at that and saying, I'm gonna make 50% is like throwing a dart from here to in Canada and expecting to make money.
Crash it for sure.
I don't know. I think it's...
Well, what were we taught early on in the business? You buy for cash flow.
Right.
Right? You buy for cash flow. Now, you may not experience the crazy gains of 64% cash flow. What the heck is a cash flow?
I would even argue that if you buy something in Detroit today for $100,000 and tomorrow the market bottoms and goes to 10,000, as long as you hold it and keep cash flowing, you haven't lost a penny. It's only when you get desperate and you need to sell because you need that, $5,000 for whatever, that you lose your money. So
you must follow the devaluation of the US dollar.
to some extent.
Okay. So for those of you, I don't want to really get into it, but you start dealing with things like the Bretton Woods Act. Okay, when we came off of the gold standard, the dollars that are in your pocket no longer are held against dollar. Did it actually come off the petrodollar? We're not doing that anymore, right?
Nixon, I believe, during the Nixon years, I think.
Well, that was when we came off the gold
Yeah.
standard.
We didn't come off it, but we were taken off it.
Yeah.
Okay.
By the,
Oh,
we're no longer using dollars.
you're talking the petrodollar. You're talking the petrodollar. Yep. So that's just a strike against the US dollar. I'm certainly no expert when it comes to this stuff, but I will tell you that when you have growth like this, 87%, even the growth, people are desperate for houses. You're seeing it in crazy, so we got a rental property over at like 8 in Greenfield, over near American Jewelry alone, if you guys are familiar with Detroit. When I bought that house, like my good honest assessment for an ARV was $110,000. the thing just appraised for 140, and I know it's worth 165 because I got a shoddy appraisal. 165 over 1 year, like that much growth, it's because the solid neighborhoods that people want to be in, they're gonna go. They're gonna scoop them up, they're gonna pay top dollar.
So what do you think of, what are your thoughts on the really low mortgage rates, 2%? Are people just holding on to their houses, they don't wanna sell it, so they're not gonna get a rate that well, or?
You know, let's get back to the one chart. The question was interest rates. Does it factor into the inventory situation?
Yeah.
I think so, absolutely, because you're gonna go ahead and purchase a house that, say $200,000. 6.5% interest rate, we just proved that it was $1,300 a month for a $207,000 house. If that's a primo house, if that's a good house at $200,000, and the rates bump 2 points, it's gonna probably put, what's the general rule, for every $10,000 in purchase price, 1% in interest rate will bring your payment up like $50 or something like that? I don't know exactly what it is, but the point is, it's more expensive. And because people are getting pushed out, I can't find inventory. I think it really, if I had to slow it down and sum it up, yes, interest rates, affordability is definitely there. You know, if you've already got an interest rate that's low, you don't want to give that up for another 4 points and something that's a little bit more subpar than what you already have. Does that make sense?
Yeah.
Yeah?
So what do you think of the market with all that? Do you think is that gonna change, or, I mean, what's your thoughts on, I mean, interest rates, are they?
I think we need more inventory. We need more inventory.
Building, kind of.
Yes. Right now with the interest rates, I don't think we're in a situation where we're gonna go ahead and, you know.
Back down to 2.
I don't think that's ever gonna happen again. So, but watch the opportunities when they come, right? Study your numbers. Jim?
On your asset class that you were showing, rates of growth, precious metals and Bitcoin.
Yes.
What prompted you to go to Fed 7? Why did you start there out of curiosity?
So I've been tracking these numbers, so I'll do a little mastermind on occasion, and I started tracking them back to February 7th. That's all. Yeah, no rhyme or reason. If I wanted to go back and track, I certainly could. But the goal is to be able to provide these type of statistics for the community. Good. Any other questions?
And the other thing that I think that has to be mentioned too is, one of the things that's really eating at people is the inflation. So that's what's making it even more difficult to get into a property. It's not just the interest rates on the mortgage, but the average consumer is spending about $9,000 more a year. And they're getting squeezed from those various sides. Median income is down, median income has dropped. So you've got a lot of factors that people have to consider, but if there's any shining examples of doing deals in this market, would you say that it has to be probably focused on first and second time home buyer areas?
I can tell you that the purchases that are north of $400,000 in the market, from my experience, have slowed down. So if you have to sell a house at $400,000 or above, I'm not flipping them there, that's for sure. I don't purchase those houses. But the 150 to call it $300,000 price point, you've got multiple buyers. Those agents, yes, shaking their head. So there's confirmation right there. I mean, you've got folks that are scooping these things up, and as long as they're in reasonable areas and they're priced appropriately, they're sold. They're sold. So that's going back to this. Oh, very first slide. Closed sales. The reason what we're down 15.5%, I would point at inventory, because if we had the inventory, it would be sold. It'd be sold within 30 days, especially if they're at the price point that we just mentioned. So, one more question. We have time for one more, Jay?
You got 5 more minutes.
5 more minutes, please.
One of the challenges, I think, I was at another event a few days ago, is that a builder told me he can't find houses under 300,000 in nice neighborhoods anymore. It's almost unheard of, get something cheaper. That's a big problem too, because a first-time home buyer, that's kind of at the tip of their investment, so you almost gotta go to a marginal area. There's some challenges there.
Or you go out into the sticks, you know?
Yeah, but yeah, that's true, but a lot of people are in the urban areas that they should say this market.
Well, and that's gonna strengthen those, just, you know, what I mentioned over at 8 in Greenfield, that property, solid neighborhood, tons of
There's
neighborhoods.
people that don't wanna be in the city.
Sure, I get that, there's
So,
many
I'm
reasons.
talking about suburban areas, I'm not saying there's not houses at 150, I'm just saying that's another challenge, is that houses are getting really, really steep for the entry level. It's been my experience.
So, our only real solution for that is to out-earn the problem. So we've got a vehicle here in real estate. If you can study these trends and find ways to create income, now you might have to get a little bit more creative than, I mean, it's been so easy over the past few years. You know, past 3-4 years, you just scoop up and capitalize on the appreciation that the market's just gonna give you. But now you're in a scenario where it's tough. Bottom line is this: if you can find an opportunity, let me ask you, who builds houses here, or who has knowledge of that? Okay, what's the general cost? Slab, ranch, with a garage, 1,300 square foot, roughly 1,000 square foot ranch. Let's make the math easy. Who would build that for?
At least you did that, because most people say, how much does a house cost? I usually say, how much does a car cost?
Sure.
You know, how much, you know.
I'm talking
cars-
builder grade stuff, wire racks in the laundry room, you know, okay shaper white
Building your
cabs.
sales costs. Sales you can get from data, so building costs will probably be anywhere from $1.25 to $2 a foot.
Okay.
So, you know, the ultra custom is 300, but, you know, a decent custom house is $200 a foot.
So $200 a square foot to build, so $200,000 for a 1,000 square foot house, now you just gotta find yourself a lot. And if it's in a reasonable enough neighborhood, I heard recently that folks are building these, same house we just talked about, 1,300 square foot houses in Redford, just north of 96, on a lot, delivered for like $240.
It's possible.
Is it, it's possible, but is it profitable, you know?
Is it profitable? A friend of mine built 2 houses a couple of years ago, built 2 houses. Mind you, did a lot of the work himself. And he broke even on 2 houses, sold for 240 in Madison Heights.
Yeah, we're not in the business for
flipping
even.
there, because he likes flipping in Madison Heights, and trying to build Madison Heights.
Yeah,
There's a lot of builders that charge up to 300 a foot now.
well, I mean, you know, what's the end result? Right.
Still not that great.
$1,000 house, like 100 bones, 1,000 foot house. It's
Yeah.
not worth it.
I don't think we have a housing problem or a building problem, we have an affordability problem. The big problem now is the gap between what people make and what houses are. Affordability right there.
No doubt. So I'm gonna go ahead and cut the presentation now. Thank you for allowing me to share. If you guys have any questions, I'll be in the back somewhere. You can come find me in this red tracksuit.